Hi there, Phil Rogers, Lauren Hall here from Loan Market Edge, coming to you with our weekly wrap. What's trending in lending? What isn't trending at the moment?
Mhm.
Lots.
Exactly.
What a start! 2 weeks, 3 weeks maybe into the
3
year.
weeks, yeah.
Feels like 3 months. It's been a cracker of a start. Nice and busy. Lots of good energy around. I feel obviously amongst the world we play in, especially the market real estate wise, things are pumping. Both across both regions for us, be it Gold Coast and Townsville. The conversation across the board is there is a lot on, which is very exciting. A couple of things we wanted to talk about next or coming in. I can't believe it's like end of January.
Yeah.
4-day week next week already. We're into the first lot of public holidays. Some people are only just coming back to work this week. 4 weeks. So just a quick note there around signing contracts.
Yes, so just bear in mind if
I'm
you're
just
out
letting you
this
talk a little
weekend,
bit.
give me just a
Yeah.
few minutes of airtime. If you're out this weekend signing contracts and you're putting 14 days finance on those, just bear in mind you do have a public holiday next Friday in the middle of that. So just make sure, again, you're super organised. Sometimes that one day does make the difference.
Yes.
So just double check that everyone is available, pre-approval is solid and ready to go, and that contract goes into the bank hot so they can get that valuation done and that approval out to you.
Cool. And Superhero Friday, clearly bringing it back.
You are back.
Just me.
You are back.
Oh, there's 15 in our team and no one wore it but me because it's all about me. Okay. Borrowing capacity.
Is it me again?
No.
Can see who brought the content to the video this week?
Still our biggest challenge by a long mile with lending, and I think it will remain that way for the next sort of 12 to 18 months at least, while this is everyone sort of adjust, and probably primarily the reason around that. And we're on board with that responsible lending, I get it, but it's that buffer that's sitting in there. So that assessment buffer, the stress test, 3% above whatever the actual interest rate you're paying is what the bank is assessing you on. So if you've got a rate of 6%, you're being assessed, I guess, for the purpose of that loan at 9%. So again, totally on board with while it's there. It makes sense. I get it. But that is tough, especially when it was 2 or 3%, right? And now we're 6%, and people with lower deposits, some are 7s, a bit higher. They're being assessed at 10% plus.
And we need to remember too, before COVID, that buffer was only 2.5%, and that 5.5 does make a difference in borrowing capacity.
Well, it wasn't even prior to that. A lot of banks just sort of didn't have that buffer as much.
Is that like in the 70s back then? Yeah, it's been a buffer for a while. To be fair,
drop that.
Yeah, it was just lower. So obviously it was increased through COVID because the rates came down, and APRA are reluctant to put it back to 2.5%. So we are seeing the impact that 3% buffer has. So,
but the good news from the good news brokers, yes, I'll come in. You keep the bad news. Yeah. Good news brokers is we do have lenders that look at this very differently. Yeah, and probably take more of a common sense approach, I guess, especially when it comes to investment portfolios, that more than one property where they might have a lower buffer on there. As an example, number one might be a lender that has only a 1% buffer. Again, greater than 20% deposit. So when it's a sort of a lower risk to the bank, often a little bit more flexible with what that looks like. So they'll only put maybe a 1% buffer instead of a 3%. That's a significant difference to a client's borrowing capacity, especially across multiple properties. You take the 1% across 3 properties as opposed to 3 times 3. That is a lot of money. And the other one, I guess some banks will still look at real repayments. And what we mean by that is they may put a buffer on top of the loan that they are looking at for you assessing, but they will look at other debts with other lenders and use the actual repayment. Not the 3% buffer on this and 3% buffer on that. So little things like that. Again, it's knowing that. It's knowing where to look, who to talk to, who to ask. Obviously, it's easy for you guys. You just ring us. We do all the work. We do everything else. First thing, ring Phil. I was going to say ring Phil. Ring Loan Market Edge. Speak to one of the team, any of the team. But these little things are critical, right? The frustrations, dealing with some really great clients today 6, 7 in the portfolio, 3 of those owned outright, very big cash savings, and very frustrated from their lender for the purpose of can't borrow 500,000. These guys are sophisticated investors. For us, it's a restructure, and there's a lot of restructuring, a lot of strategy, goals, objectives. You're putting a lot of work into that to come up with a plan for these clients, not just now but going forward as well, especially in the current market. So
great job.
We're seeing a lot of that. The other thing we talk about, and again, it's great to go, we can find ways to, work within policies in different banks, but borrowing capacity versus affordability is probably something we talk to our clients a lot. So borrowing capacity based upon what the bank will lend you, all of this included, buffers, no buffers, 80% of the rent, 100% of the rent. Will they take all of your overtime, your allowances? Do they take 1 year self-employed? Do they take a breath? So there's 1,000 different ways that can happen. Borrowing capacity, what they lend you, but then affordability for us, it's really important because irrespective of what they'll lend you, you've got to pay it back, right? And you want to get ahead. Right. So we really spend a lot of time more so not answering that question, what can we borrow? Well, it's like, let's talk about what we're comfortable repaying. Let's talk about if there was a change in circumstances, what does that look like? Right. And so having a more in-depth conversation with our clients and building that relationships and really working through the scenario with them and those goals and objectives into the future, not just the transaction.
Absolutely. Yeah.
And affordability for us, and I say it in openly, but it's not okay to just make minimum repayments. Right now, yes, again, a little bit of a throwaway line, and there is a percentage of clients for whatever purpose. But the goal for us, we don't say bad. We're not bashing the banks. I don't work for the bank. I don't want you to have a 30-year loan term. Everything we do, in as a business and as a team, is a strategy is about if debt reduction is a goal, if it is a home loan, well, how do we get ahead? Right? What is an extra $200 a week look like? What does an extra $50 a week if it's possible? Or significantly, people have been saving really heavily at the moment. If they can replicate that into a debt repayment strategy or a new repayment or additional repayment to the new home loan, then suddenly, that $500 a week on I did one this morning on a $960,000 loan, saved the clients. It shaved 16 years off a 30-year loan term and save them a touch over $600,000 in interest over the term of the loan, right? Just by effectively what they've been paying rent and saving now, taking that across to the new home loan and starting to look at that. So it's just not taking the minimum, not just sort of really going, for us, it's about packaging that up and helping the clients empowering them to make good financial decisions, not just pay a home loan set and forget for the next 30 years. So shameless plug for the Loan Market Edge website. Jump online. Check us out. But there's a really cool little section in there, calculators and tools. Click on that tool. If you haven't done it, you've got a home loan, jump on there now. Press pause, YouTube. Right now. But jump into the additional repayments calculator and work out on the mortgage that you've currently got owing. If you were to work out whether it's an extra $50, $200, $500 a week, whatever that repayment is, $1,000 a week, put that into the calculator and have a look. We've got clients that are paying home loans off in single digits. Single digits, not 30 years, right? And a lot of this is just recalibrating or recalculating their current plan, but steering that money in a different direction. So use that calculator, have a play around with it. We'd love you to reach out and let us know what it looks like, because I guarantee it's quite, I guess it's exciting. It's confronting because you're like, shit, swearing. Trying to not swear as much online. Online. It's what happens when you're passionate. More passion. And jump on and have a look at it. And I think you'll find that should hopefully motivate you to look at some of these strategies a little bit different. So shameless plug for us. And last but not least, coming up Sunday the 28th, auction event, 127 auctions under the hammer in a day. But more importantly, we have a stand there. Come and check it out here at the Gold Coast Royal Pines on the Sunday. Have a look online. They've got a huge selection of properties up, but we will be there. Prizes, banners, goodies, all sorts of stuff. The place to be on Sunday the 28th at the Royal Pines. Come say hello. And we'll love to see you there. But for now, enjoy the weekend and we'll talk to you soon.
Bye.
Bye.